Welcome back, everyone. Today we're having a wee look here at the London Stock Exchange Group PLC. Bit of a mouthful there. But they are traded on, unironically, the London Stock Exchange with the ticker symbol LSEG. Now, some of you might be thinking, it's a bit like the Spider-Man meme, isn't it? Where they're both pointing at each other. Well, the London Stock Exchange Group owns the London Stock Exchange. Now, that sort of means that they own several subsidiaries that do a lot of the data analytics, and they have a lot of companies underneath their wing, as we're about to see here. They're a very interesting dividend stock, so I would highly recommend you stick on till we get to the Dividend Max, where we'll look at the dividend, because it doesn't actually say yield here, but it's about 1.51, which doesn't sound overly high, but the reason for that is their dividend per share has been growing very rapidly, but their yield is hindered by the fact it is very, very high valued stock. Currently trading at £74.89, one of the much higher ones. You know, it's sort of on par with most US stocks that are quite high in dollar value. So yeah, and over the past 5 years, it's went up just a casual 95%. Not bad at all. And in the last year, she's down about 1%. In the last month, she's down 8%. So, you know, weighing up whether it's a good time to ever get into this stock, we'll have to see. We'll do a wee deep dive in that as well. So, yeah, it is based in the UK, headquartered in the city of London. It owns the London Stock Exchange, Refinitiv, LSEG Technology, the FTSE Russell, and a majority stake in LCH and Tradeweb. Now, you might go, well, what on earth's all that? Thank God for the pause button sometimes when you need a sneeze. Yeah, we can jump right in here because I want to have a look at a wee bit of their subsidiaries. Sometimes I use Wikipedia. It can be a good sort of learning tool to see, well, what are these companies? So Refinitiv is an American-British global provider of financial market data and infrastructure. There you go. Owned by the London Stock Exchange Group after they bought it from Blackstone Group, which held a 55% stake. LSEG Technology is obviously based in the London Stock Exchange itself. And they own the FTSE Russell, which provide market indices and licenses and whatnot, such as the FTSE 100 and the FTSE 250 and the Russell 2000 index, among others. So it's starting to, you're starting to piece together here what exactly these things do. LCH is a British clearing group that also serves the OTC markets, over-the-counter markets, and they approximately 50% of the global interest rate swap market. Mad. Tradeweb is another company built on, yet again, financial services. They provide over-the-counter OTC again for income products, ETFs, and derivatives. So they own quite a bit. So we're going to jump on to their website here and have we nosy. As I said, they're trading at about £76 at the moment. It's quite high. Simply Wall Street will back me up on that, and that it's a very, very, it's a bit like Diageo. It's a good growing dividend payer. However, it's a very high entry price at the moment, which puts a lot of people off. However, for the long term, it is a potential. It's also a potential to look in the next, sort of couple of months to maybe a year or two, short to mid-term anyway, for to see if the price maybe comes down. Maybe buying in might be an option for some people. Although then again, at the 1.5% dividend yield, it could fit certain portfolios quite nicely. But we'll look more into them here now. This is their main website. There is the wee investors relations. We'll look into that in a wee second. We're going to see who they are and a wee bit of their history. Then we'll move on to products and services, and then we can jump straight into a wee bit of a presentation. So yeah, they do data and analytics. I won't trawl through all of this because it is quite the write-up. But you sort of get the idea. Capital markets, they offer access to capital markets and liquidity across multiple asset classes. Goes into ETF, fixed funds, foreign exchange market, the Forex trading with currencies. Their group is home to several capital formation and execution venues. London Stock Exchange, the AIM, Turquoise, Curve Global, FX, and Tradeweb. Nice. Post-trade, and then that's obviously clearing and reporting, providing risk, balance sheets, and financial resource solutions. Okay. So a lot of that could just fly over your head, and that's perfectly okay. But it's trying to understand certain companies. I'm a firm believer of, you know what they do, as opposed to how they do it and what they carry out. That's a whole completely different story, because some of them get extremely complicated. I mentioned such as doing the Hikma pharmaceuticals. I don't know what every single drug is like, and I couldn't tell you. And even if I were to research every single drug, it wouldn't really help me. They have over 700 products. As for the London Stock Exchange Group, I couldn't tell you what every single one of their subsidiaries does exactly, but you can see how they all connect in one massive web to LSEG. And if you can bridge that knowledge as to at least what they all do, without going into the specifics, I think that's good enough for me. Our word is our bond. True in 1801, just as true today. So they started back in 1698 at Jonathan's Coffee House. What an apt name. They began issuing a list of stock and commodity prices called the Course of the Exchange and Other Things. What a name. Only a casual 420 years ago. 1801, then it comes into existence. 1986, the UK market is deregulated in the Big Bang. 95, the FTSE Group is created. Okay. With the London Stock Exchange holding 50% stake, and then they went on to acquire the rest in 2011. AIM, the alternative investment market, is founded only in 1995. There you go. Focused on dynamic, smaller companies. It will become the world's most successful growth market. Yeah, because a lot of the companies that actually end up joining the FTSE 250 or 100 actually started in the alternative investment market. July 2001, they became a publicly listed company. You could actually buy this at, I think it was about 30 to 34 pound, not but 5 or 6 years ago. So, and I don't know how long they've been paying their dividend. We'll see that in Dividend Max, but I think they've been playing at least 10 years. 2007, the Borsa Italia merge. I actually think they demerged that. We'll see that later on. Millennium IT, a Sri Lanka-based technology, provides the global capital markets industry is acquired. Serving, right. 2009, they acquire a majority stake in Turquoise, the pan-European equities trading platform. Nice. 2010, they launched a foundation for charities. Okay. 2013, a lot of acquisitions. A lot of these companies have been doing videos on there. They're very good at taking and acquiring other companies. It seems to be common practice at this level, to expand markets, and, take companies that are maybe in your field and, they're doing quite well and they have a unique product or something. You just go in and you just acquire them. Very nice. Purchased a stake in the LCH group, known as ClearNet at the time. Okay, FTSE 100 celebrates its 30th anniversary in 2014. Was I just finishing school at that stage? I was in the middle of school at that stage. I vaguely remember the 30th anniversary. It was made a wee bit of a big deal in the business class, so there you go. Bit of history there with me. 2015, the indices came together as the FTSE Russell. 2016, was that another? I'm not too sure what that is. But anyway, 2017 completes the acquisition of Mergent, a leading US-based provider of financial information. Another acquisition of Yieldbook and Citi Fixed Income Indices. Nice. I actually acquired that from the Citi Group. 2017, the FTSE 250 celebrates its 35th anniversary. Majority shareholder increased in LCH. LCS is mentioned quite a bit through this, because it processes just a casual 1,077 trillion. In the first time, over 1 quadrillion has been cleared in 1 year. Quadrillion? Can't even get my head around a trillion, let alone a quadrillion. Oh man, that is a number to behold. I've never, I don't think we'll see another company that can turn around and say that one of their subsidiaries actually cleared over a quadrillion in a year. That's madness. LSEG acquires 5.2% in Euroclear. They acquire Beyond Ratings, a highly regarded provider of ESG data for fixed income investors. Shanghai London Connect in 2019 welcomes its first issuer. 2021, they complete the all-share acquisition of Refinitiv. Yeah. to create a global financials market infrastructure and data provider. There we go. Okay, so we're actually going to nip up here into their investor relations. From here, I always like to point out what you can find. Well, we could go... That was just their history, who they are in their history. I didn't go on to anything else because, as you can see, there's plenty to look up. You can see all their products, from the stock exchanges into then trading, into post-trade, analytics, and all their technologies here. So if you're doing a deep dive into this company, well, this is technically a deep dive. If you want to do a super, super deep below the earth dive, there is plenty here to suit you. Venue and studio hire as well as... There's also events and resources. Now, jumping into the investor relations is where you can find all the information you need about a company, such as their interim results, end of year results. You can find out about, announcements about their latest share buyback. We'll be mentioning that later in the video. And then you can see more information on them, presentations, everything. I'm actually going to click on the presentations because I had one earlier. I'm going to just use the one here that I had from earlier. Shaping the future of our industry to serve our customers and markets better. This was from the 30th of June, so obviously not the end of year one, which we will have soon enough. They had strong progress in the first half across all divisions, and we're going to see later on they launched a £750 million buyback, share buyback. Also nice to see. Jumping down to here. So you can see in 2021 they had data and analytics brought in a casual 1,872 million, and it's actually up nearly about 25% year on. That's very impressive, I must say. Gross income also grew. Gross profit grew. Underlying, all the analytics is doing quite well, even in factoring the mention about Russia and Ukraine impacting a few things here, but it doesn't seem to have done too much damage to them. Operating profit from equity holders went to 548 million. It actually ends up that they made an extra almost 30 million. And then you can go down here, goes into speaking about like there's certain industries. So data analytics revenues up like nearly $500 million. Capital markets is up 181 million, and post trades up 37 million. So all three of their main markets are growing quite rapidly, which is fantastic to see for this company. I think there's a few more pages. You can go on. This is like a 20-page document. It's not as pretty and colourful as a lot of all the other ones, but you can go as deep as you want into it, to be fair. Jumping over to Simply Wall Street, the platform that I used to do yet another analysis, but this one's got nice graphs, because I love graphs. I'm a sucker for them, and I must say, I do love using Simply Wall Street. If I do have a affiliate link at any stage for you to get any free membership or anything for this, I will have it down in the description and pin comment. At the moment I am not part of that program, but I'm hoping to see into the future for you. Dividend here for the wee snowflake. They have a flawless balance sheet with a solid track record. This goes into 5 main avenues of the business. Goes about their value compared to its peers, industries, and its forecast. Talks about the future of the business in the next few years, the past over the last 5, its financial health overall, which actually it gets a 6 out of 6, which is very impressive. Very rare I would see that. And their dividend gets a 3 out of 6, so it goes about their dividend as well. It's trading 2.7% below its fair value, so it's pretty fairly valued for, a discounted cash flow model, which essentially means, it's not overvalued and it's not undervalued using that model. Earnings are to grow 15% next year, and earnings grew 236%. That's actually pretty crazy. I'm not too sure how accurate that is. So some of the London stocks on this aren't perfect, but it gives a good enough analysis across the board. I don't even need to go into risk checks because there apparently isn't really any. Okay, let's scroll on down. You can see we timeline the things that were happening just in the last year alone. Client update, they had an annual general meeting, executive board change, auditor changes, and a share buyback. Let's go to 5 years. Anything super interesting happen? Special call, dividend increases. Nothing too out of the blue there. Markets actually suffered pretty bad. The capital markets are down 20%, but this stock's up 1% in the last year. It's beat out quite a bit there. A PE ratio of 45, but it's a PS ratio. What's that? That's price to sales. Ah, right. That are not typically profitable or growing rapidly. Okay. It's the PE ratio. It's hard to tell because this is a particular, it's a sort of data and analytical industry. So I wouldn't say the PE ratio here matters all too much. Like what competitors is it putting them against? I'm not even familiar with any of these, and they've got the market cap of 41 billion. So putting them up against someone that's like got 3/4 of a billion is not very fair, is it? Let's go down to valuation, see what this says here. It's actually very high to some of the other exchanges, but it is the London Stock Exchange. Let's face it, one of the biggest in the world. There we go. So fair value is about £78. It's currently priced at 76. It is as I said, an extremely high entry price, but its dividend is good. Its financial health, it is a solid company. I don't think it's going anywhere anytime soon. If the London Stock Exchange Group goes anywhere, we're all in serious bother, because they are such a solid company in that regard. Profits have been growing quite steadily over the last few years, especially revenues. Revenues have really, really climbed now, and they're forecasted to keep on going. So again, good prospects for the company in at least the next coming few years. Past performance, nothing of major note, pretty decent. 2020 it suffered quite badly, but obviously pandemic has a lot to play in that one. Financial health, when you're managing almost $1 trillion in assets and you've not that much in debt, it's pretty good. Everything about their financial health is pretty solid. Because they're that particular type of business, it's hard. It is quite difficult to really analyse anything beyond that. They don't exactly have... they do have accounts payable. Only 1.6 billion sitting on it. At it. And 8.3 billion in debt. That is some number. Debt just is a number. It's a certain size, isn't it? Dividend yield is... Okay, it's 1.33. Maybe I was being overzealous with a 1.51. 1.33. Okay, so it is in the bottom 25% of the market, not even close to the industry average. But look at it here. It has been growing its dividend per share, which is the lighter green line, not the blue line. Don't worry about dividend yield for now. It's been growing it year on year. Yield, not so much, simply because it is... back in 2012, what was the value of the company in 2012? Let's see here. 2012, it was trading at a cool £8. £8. Yep, you heard me right. Heck, it was £40 in 2018 when I left school. So it near enough doubled in a bit to a height of almost £100, and then it receded back down to about £60-70, where it has remained for at least the last year. Having wee peaks and troughs, but nothing major. Down to management, gets a cool 6.4 million. CEO David Schwimmer, not bad at all. 4-year tenure too. That's pretty good. 4 years is I don't know if that's the average tenure is 4.1 years, so he's approaching the end of the average. Let's go down. I want to see ownership. Who owns most of this? Institutions are actually the largest in this one, followed by private companies, and then general public. Okay, let's see. Refinitiv US Holdings, okay, and Qatar Holdings, BlackRock. They did acquire Refinitiv US Holdings, but I'm going to guess there was something arranged there. I'm not 100% sure. Sometimes looking at the ownership thing, you can really... There's T. Rowe Price Group is actually in this one. That's a US company I'll be doing a dividend video on very soon. Very interesting company, T. Rowe. Let's jump over to Dividend Max, where we can have another look at the dividend chart. A bit of a nicer one, in my opinion. As you can see, growing dividend year on year. 2011, not so much. 2014, bit of a dip again. But from 2015 onwards, they've had quite the climb. And in fact, in the last year, they've had a real nice increase. I think 27% it went up. Does it say there? Yeah, 27% in 2021. So again, it's a massive growing dividend. It is. It's a solid chart. Normally, I'm in love with charts like this. However, very, very high entry level for the price. So that is something to bear in mind. When is their next date? For anyone new or anyone wondering what next dividend date is, It's the day that you basically need to have the share. You need to own the share by that date in order to be titled for the dividend. But the ex-dividend date, it's actually the 17th. So it's a day. Take the ex-dividend date, and a day before is the day you need to own the share. So you need a share on the 17th, and then the 18th it's counted, and you get paid. On the pay date, declaration date doesn't really matter all that much. That's just the date that they're going to pay the dividend. Or the date that they announce when they're going to pay it, and the ex-dividend. Well, next ex-dividend date. The next ex-dividend date is the 4th of May, 2023. They only pay twice a year. So when do they pay? They pay in April, then August, May, then August. That's pretty. May, June, July, August. Okay, well, yeah, that's fair enough. So it's their payments are really quite close together. April, August, May, August. You know, not often you see that. That's actually quite a unique thing. But their final one is the bigger. See, sometimes companies divide it differently, so their interim payment's lower than the final. The final one was 70 pence, but the year before it was 51 pence. So as you can see, it was a massive increase. Then 25p turned to 31p, and it's been doing that pattern for at least the last 7-8 years. Pretty solid. On the trading 212, the brokerage that I personally use. So if anyone's interested, there's always a wee affiliate link in the description where you can pick up a free share if they're running the offer. They might not be running the offer at this stage, so always check in to see if that offer is running. Otherwise, it's just a handy link to get to this stock brokerage. I use it because there's no fees. I don't really bother in any of the spread betting or CFDs. That's more of a gambling side of the stock market that I kind of stay out of for most part. Might do a few videos in the future, but at the moment I prefer just having an ISA and no fees. There is foreign exchange fees and other things, but there's no like actual fees for doing a trade, because some brokerages do charge you for the transaction alone. But yeah, pretty good. They have a few useful charts here. A bit of information on the company. Goes into employees, 23,000. Financial is the sector. Investment services is the industry. And they say the yield's 1.36. So I don't know. Depending on the stock price, it probably does change quite rapidly. But yeah, total assets almost $750 billion, and operating cash flow. Well, if you want lots of cash flow, that's pretty good. Whoa, minus 5.35 billion. What did they do there? Retirement of debt, issuance of debt. Fair enough. That is fair enough. Very large investment, I think. That was 4.35 billion. I think that was them acquiring Refinitiv. I'm nearly sure that was why that blue chart or that blue line's up so high. But yeah, very interesting company to join the UK dividend portfolio list for the stock exchange that I do everything on. I thought it was very apt to see them on the watch list, and I thought I do need to tackle them at some stage, and I thought this would be the perfect time. So I hope you have all enjoyed the video. Let me know what you think in the comments section below. I always love chatting away to you. And yeah, is it in your portfolio? Is it something that you would buy into? I'm very interested to hear your thoughts on it, so let me know below and we can have a wee chat about it. All right, see you all in the next one. Bye bye.